Nvidia makes up about 7.5% of the S&P 500, and you compare Nvidia to entire sectors. So utilities is about 2.5%. Nvidia is 3 times the size of all utilities put together, all the utilities in the S&P 500. Staples is 5%, 5.5%. Then healthcare, which is a huge sector. You think about Pfizer, Merck, and then some of the smaller companies like Moderna. Healthcare is 9.25%, and Nvidia, the biggest stock in the solar system, is closing in on that.
The S&P is this ever-changing index. 30 years ago, financials were big. 20 years ago, energy was big. Now it's tech. If you're an investor, you think, okay, I'm buying the S&P 500. I'm buying big U.S. stocks. I'm diversified. That diversification is shrinking by the day because tech is overwhelming the index, and Nvidia is bigger than Staples. It's bigger than energy. It's bigger than utilities, real estate materials. It's closing in on the industrials and healthcare. So one stock is bigger than these massive, massive sectors. And so, okay, that's great. It's benefited investors. But if you're looking at a portfolio and you own the S&P and you own large cap growth by chance, and maybe you own a thematic AI fund because you're bullish on it, that's a lot of exposure to a small cohort of names that are usually found in those indices like Nvidia, Microsoft, Meta. So I just worry that investors need to understand what they own now. It's becoming more and more important just given how these companies are really taking over the world.